Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Do you believe that the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
This is not unlike what he already said quite a while ago. This was 5 years ago. This is a snippet from 60 Minutes.
Can the president fire you?
Well, the law is clear that I have a 4-year term, and I fully intend to serve it.
So no, in your view?
No.
A lot of folks were not happy about this. Shortly after the election, because we see this is Elon retweeting, this tweet says the executive branch, and he says 100, so Elon completely agrees with this. And Elon has made some other tweets recently showing skepticism or distrust of the Fed. That's how the Constitution was designed. The Federal Reserve is one of many examples of how we deviated from the Constitution in that regard. Yet another reason why we should end the Fed. There's a moral, like this intrinsic moral motivation for folks who want to end the Fed. They do not like the idea of it. It leaves an ill feeling in their stomach. I talked before with my streams with Jeff, where generally speaking, the Federal Reserve aims to have an average inflation rate of about 2%. The reason they do this is because they want it to be very close to zero. They don't want high inflation, obviously, because then the prices keep shooting up. It would be difficult for the average person to afford things and earn enough to keep up with price increases. It's also bad for businesses because then they don't have a very stable business model. They want to avoid deflation, which is inflation is negative. And the reason why the Fed doesn't like that is because deflation discourages spending and it discourages investment. It encourages people just to hold on to their cash. If people hold on to their cash, money does not move around. And if money does not move around, then the economy slows. And then you can actually have real GDP losses from the stagnation that occurs. So there's an interesting irony here. A lot of the people who are critics of the Fed are very big fans of investing in gold. And then more recently, we've seen crypto. Critics of the Fed, like Ron Paul, is they have a lot of, if not most of their wealth invested in gold. So they own gold. And the idea is it hedges against inflation.
Yeah, I would say that gold would be way down on my list as a store of value. Still, if you go back to 1900, you were talking $20 gold. Well, you take 20 to 400 in 100 years. The Dow went from 60 to 12 or 13,000, and paid you dividends during the time you owned it. It was 66, I think, at the start of the century, and I forget what it ended, but it's 11 or 12,000. And if you own gold, you paid $20 in 1900 or thereabouts, and then we'll say you had it $400. 100 years later, in the meantime, you paid insurance and perhaps some storage cost. It really is it's not a store of value. I'd rather have the ability to sell people a pound of candy 20 years from now, and if they're dealing in seashells, I'll get an appropriate number of seashells instead of paper money for it. But I just don't see gold as a store of value, and the truth is it hasn't worked very well. I see no reason why it would work well in the future.
Crypto.com, why was Bitcoin created? Now, so the concept of Bitcoin first emerged in 2008 during an ongoing financial crisis. It aims to address perceived issues of trust and stability in traditional economic systems by eliminating the need for corporate banks and centralized financial institutions. So in many ways, this is a response to the Fed, kind of like gold investing is as a hedge against inflation. Because once the Fed came in and ensured that your average inflation rate over time would be 2%, that's when the thesis for gold as a hedge against inflation emerges. It is a response to the Fed. Bitcoin's basis for trust is its proof of work system as an alternative. So it's peer-to-peer. It's trustless in the sense that there's no central authority. You don't really need to go through anybody to exchange your Bitcoin with anyone else. You just need your key to your wallet, and you're basically good. So it can go across borders. You don't need to worry about your assets getting frozen with Bitcoin. As this article says, Bitcoin's most successful function today is as a decentralized store of value, independent of national currencies, is what I said. It basically functions like digital gold. There's some interesting things going on here and some interesting contradictions. The nature of currencies, when they function as such, is that their value remains relatively stable. Bitcoin has just been a lot of this. It's definitely gone higher over time as it has gotten more widespread adoption, which drives the price up. But if it eventually gets to the level of adoption where it is a currency, it should then remain stable. There's a question of some of the people who are enthusiasts about it believe it will be a currency, but also believe that it will be a better investment asset than, say, stocks. But if it's a better investment asset than stocks, then it, by definition, cannot function as a currency. It would be too unstable to be a reliable form of currency. People would be too subject to market volatility. And then we also have to consider, I haven't even gotten to the big part yet. What happens when or if the Fed gets abolished? What happens if there's no longer a central bank that can ensure that the dollar has 2% inflation? Well, in that case, deflation occurs. And the very purpose of Bitcoin existing is lost. Will the value of Bitcoin continue to rise in that context? Will it go down? If the value of a dollar goes up, what happens to Bitcoin then, right? The value of the dollar going up would be deflation. You know, Bitcoin, like gold investing, is meant to be a way to protect someone from inflation by the people that believe in it. So if the same people who want to end the Fed also love gold and Bitcoin, what happens to their gold and Bitcoin when the hedge against inflation starts the dollar or the other whatever currency you're using? You know, if you live in Europe and use euros, what if deflation starts happening? That really turns the whole idea upside down. And so there's a lot of these mutually exclusive things in which the proponents believe. They have these moral reservations against the Fed and central banking. Gold and crypto is where they want their money to be, and they seem like they would want to stick with those assets even if you get rid of the Fed. I haven't heard anyone say, get rid of the Fed and then I'll sell my gold and my crypto. Then you have Buffett, who basically says, you know, if you were in the Dow, if you were in stocks, which is, say, if you were in businesses, you would have been much better. A business can survive for the long haul. If you produce something of value and you provide it to folks for more than it costs you to do it, you can keep going for 357 years. And so my point is, if you want to hedge against inflation, and if you want your money invested in an environment in which, whether there's inflation or deflation, you have this value-creating, self-compounding element to it, you want to be in businesses, which is to say, in stocks. Where will crypto be in 357 years? Where will gold be in 357 years? The ironic thing I see here is many of the people who are opposed to the Fed and central banking, again, for some of their moral reasons, whether it's against the Constitution or they see it as government intrusion into a free market, they're big proponents of capitalism. And yet they seem to forget their own capitalist principles. They let their own psychology distract them from it. You know, if you're really a believer in the capital part of capitalism, you would think, well, how do I put my capital to work? How do I get the best possible return? How is value created? And value is created not by setting interest rates, and is not created by thumbing your nose at the institutions that set interest rates. Really, the big lesson I've been preparing here is how the psychology of investing is important just as much as the assets we pick. Because we decide when we go in and out of an asset. We decide when we're in cash, when we're in stocks, when we're in bonds, when we're in real estate. When we do that, we need to be very objective about it. I am not going to say, for moral or political reasons, whether or not we should have central banking. The point is, if you really believe in capitalism and you want your actions to show it, you will focus more on the things that you can control, which is where you put your money based on the fundamentals of those assets and not based on what you think is moral or immoral about the world.